Hey everybody, how's it going? We're doing the Bootleg Weekly on a Friday. I actually have to tweet this out. Roy wasn't feeling so good, so he backed out like 20 minutes ago. So we're just gonna do it by ourselves, and maybe we'll invite Steve or Matt or whomever to join us. There's a whole bunch of topics that I actually want to cover. We had a pretty big surplus in terms of the topics for Tuesday's show. The market is, of course, down right now. It pulled back as a result of some of the Oracle news we got, the Broadcom earnings, and overall just fears around AI and the spending with regards to AI. So I mean, it's not a thesis breaker. It's not something that's going to last over the long term. It's something where it's a short term pullback, and I think we're going to be right back on track, and right back on track soon. Yeah, with just me, coincidentally, because I don't check my Twitter messages as often as I should. Roy, it's not his fault. He messaged me like 30 minutes ago, and I just checked literally 2 minutes before hopping on the stream. And so I didn't want to really cancel it for you guys. I wanted to go ahead and do it anyways. Nebius dip buy. Yes, absolutely. I wouldn't be against covering Nebius, talking a little bit about it on this show. Let me actually tweet this out and go from there. So give me one quick second. It's tougher than it looks to do these shows just by one person, because you have to concurrently organize what you're going to talk about, bring up topics, and also maintain a coherent stream of consciousness thought. I have a Celsius right here. We're going to crack it open. Even though we have a SoFi show later on tonight, whatever. We're going to have some fun. We're going to chat about the markets and see what's going on. Let me also reach out to Matt. Yeah, Roy was sick. I think he's going to be okay for the show later tonight. I think he just needed to lie down for a little bit. And I reached out to Matt and Steve, and I think Steve has his own show coming up, so he might not be around. But yeah, we'll see. We'll see if Matty wants to join. I want to make a video actually about Nebius from their Missouri news. So I don't want to cover it too in depth here because I don't have all the news posts ahead of time. But I'll cover one tweet for you guys on the Nebius side of things. And a lot of this thing with regards to Nebius has not been priced into the name. So let me throw this up here. Okay. So here we can see Nebius. I made this post, of course. Gen Z Investor was the first to post about this on December 9th, a couple of days ago. And Gen Z Investor said, breaking news coming from the Independence, Missouri. And Nebius just acquired 398 acres of land in Missouri. Reports came out yesterday after officials in Independence approved $2 billion generation plan last Friday. They're expected to construct an 8 to 10 data center campus with capacity in the 800 megawatt range. So all of this is city council approved. We're learning through the permits around this. It's expected to be announced at some point officially in Q1 2026, but we don't really know for sure. There's no official press release from the company. This is very small. There's no official press release from the company. It's just public land and city records. And so the stock is not going to be moving on the back of that. But Nebius is making multiple moves in the US alone. So in addition to New Jersey, I mean, we talked about Indiana. We talked about, so this is Missouri. There was also some talk around Dallas. There was also some talk around another location, which I can't remember right now. Indiana, Missouri, Arkansas, maybe. I'm not sure. Um, so Nebius is expanding, and this would be the first fully owned and operated Nebius facility in the US. Obviously, they have some pretty aggressive targets that they need to hit in 2026 from a capacity perspective, and this is them going in the right direction. So I think the AI trade is still going to be very alive and well. Of course, there's jitters, there's fears from that perspective, with the market uh, being very skeptical around some of these growth targets that are being put up. And so it is what it is. I think all the pullbacks are dip buying opportunities, personally speaking, because they are not going to, there's no fundamental thesis breaker essentially in what the reason why these companies are dipping. Let's take a look. Do I like Oracle here? I haven't taken a look at Oracle's earnings and what they exactly announced. I do know that the call apparently was horrible, and the free cash flow I think is like falling off a cliff. So I have never really looked at Oracle very much in depth, but I saw this post around the free cash flow for Oracle, and it just looks crazy, man. So I mean, we'll see where Oracle ends up shaking up, but I'm not really looking to add Oracle right now into my positions. It's not really something that is interesting to me. But unfortunately, with algos and whatnot, it just so happens that one of these companies can bring down the entire market because everything trades in a basket, essentially. And even companies that are not even public, man. Like you have OpenAI, that's not even a public company, that can come up with something and bring down the entire market because they use them as proxies, as a canary in the coal mine, essentially, for the entire AI trade. So that's my overall thoughts there. I didn't listen to the call. I don't own Oracle. I don't intend on owning Oracle, and I don't intend on listening to the call either. So again, I think this is a dip buying opportunity. I wrote some covered calls on Wednesday, and those seem to be doing very well for me today because everything's been pulling back over the past 2 days. But I also have some cash secured puts that are in the money for Nebius, which I eventually want to be able to roll out of as well. All right, let's see. Am I still making a video about BMNR? Yes. And there was actually some really interesting news on the BMNR front around the tokenization aspect. And I think it's going to make for a very good video. YouTube, I saw some news earlier today that YouTube is now partnering, I think, with PayPal, if I'm not mistaken. But basically, they're going to allow to pay creators in stablecoin. And there was the decision around the tokenization of all stocks and assets. And so I'll be covering that much more in depth in the BMNR video. I'm going to be recording that on Saturday and posting it later on tomorrow. And that, I think, is going to be a bigger one because there was a lot of news with regards to BMNR specifically. Tom Lee keeps acquiring more BMNR shares. I saw that he did a new podcast with Scott Galloway, and he's still on his target, man, of 5% of total Ethereum supply. Shareholder meeting coming up in January. Of course, the first dividend is going to be paid out shortly here in December by BMNR. So, and BMNR, I think, also rallied a little bit over the past week. It's just so volatile. Like I was down 9% today, and they're either up or down anywhere between like anything above 5% every single day. The beta is just so incredibly high. Ethereum as well. I mean, crossed over 3,000, went I think to 3,400, and then pulled back down with the market. So it really is going to depend on the macro. But overall, I think BMNR is doing just fine. And I think the adoption of the Ethereum ecosystem continues at a very high clip. So I'm going to be covering all of that in a video tomorrow. So make sure to check that out. Yeah, dividends is a joke right now. I mean, 1 cent is not like a real dividend. but it sets up the scaffolding and the infrastructure for them to be able to increase that very easily in the future. So that's the positive piece around the dividends there. It's that we don't necessarily expect them to stay at 1 cent if the company starts staking in January. Let's assume BMNR reaches their 5% target. Let's assume they start staking. Then they're not going to be staying at 5% or 1%, 1 cent dividend. That dividend is going to be increasing if they want to distribute those gains back to shareholders. And we don't necessarily know if that's the plan or if they are going to do like their staking rewards into acquiring more Ethereum, or if they're going to distribute them out. But the dividend just provides them a good mechanic for being able to do that. And them starting it early before they even start staking is just, them, in my opinion, setting up the scaffolding. Okay, we have Matt here, and Matt's going to save our ass a little bit on this stream because Matt knows how much I hate streaming solo. Hey, Matt.
What am I saving?
Nothing. Just
thinking this morning, brother. I was first and foremost, I was in the shower, of course, thinking about you.
Oh, okay.
Reality. What I was thinking about was, man, what am I going to spend this $500 on that I lose when I lose this bet?
Bro, this bet has been incredible, like too close for comfort. So, for those who don't know, Matt and I have a 500 United States dollars bet on.
No, you can't. No, I'm just kidding.
On whether or not SoFi is going to close off this year above or below $25.
Sure.
And I thought I had that in the bag. I thought that was the easiest bet in the world. And then we had a couple of pullbacks, and it's not so clear cut anymore. So SoFi is currently trading for, I think, $27 right now. Let's take a look.
Something like that.
On the screen. And yeah, it's anybody's ball game. The only difference is that when we made this bet, SoFi was, I think, like $11 or $12. So it's getting close to. If this bet had time decay on it, if it was like a covered call with time decay, I would have this. But I don't know, man. Matt was there, and then he was gone. He could be there again. We don't know if we have a Santa Claus rally. He'll be gone for sure. So,
if I could,
you can
make a deal with God, so we could trade places or whatever that song is in Stranger Things.
Sure.
I'm just trying to troll you. How are you doing, brother? I miss you.
Well, instead of making a deal with God, we can renegotiate your mortgage here. And I am willing to. I was going to offer you this in the beginning of January once you lose, but I'm operating under the assumption that you lose. Yes, George, it has to stay over $25 for me to win. And if it's under $25, Mr. Matt Money adds $500 to his stack. My bet was going to be double or nothing for 26.
At what price?
45. That was my price target for 26 was 45.
Can we just do a separate bet for 500? Because when we meet up and wherever we meet up, we have to still figure this out. I'd rather just spend that $500 and just have a good time with you. I don't know.
We could do a separate. It all adds up to the same thing at the end of the day.
Exactly. It's all the same.
But 1,000 just sounds better from a content creation perspective. You think about it. You sit on that and you think about it. And remember,
I don't know if I'll ever financially recover from this.
We're gonna double or nothing until become a millionaire from this.
Eventually, I'm just flying you out, PJ style, to wherever you want to go. Oh, that'd be great.
So, yeah, it's easy to say Tevis wins. The difficult part of the double or nothing bet is that it has to close off the year 2026 above $45, not just hit it at some point in the year. It has to close off 2026 above 45. So not so clear, cut and dry. Matt, I think it's going to be an interesting bet.
I'll have to consult Steve. Steve's already upset that I made the $500 bet. So
why is he upset you made the $500 bet?
Because I don't think he understands that you and I go on vacation and leave the country that in cities that we live in. Unlike Steve.
Does he also
no hit on Steve. I love Steve more than anything. He's a diehard New Yorker. So anyway.
Does Steve also understand that when we made that bet, SOFA was like $11 or $12?
I don't know.
Like we basically made it halfway through the year for the stock to double.
Yeah, Steve's camp in New York. That's it.
Yeah, Steve's camping in Manhattan.
Effing Steve, dude, good guy.
Yeah, it's going to be an interesting bet.
What are you buying these days, Tevy?
I bought some Meta.
Oh.
Yeah, yes, I am now a Meta shareholder, all grown up, and I am currently deeper into margin. So I'm not buying really anything right now until I get out of the margin. But the goal is to buy some Meta, buy some Amazon, and then maybe a little bit of NVIDIA, and just bolster up the defenses a little bit. Because right now it's just all offense all the time. I have like 18% in Nebius, like 12% in BMNR. It's just chaos over here. So the portfolio is up, up or down 5% is a pretty daily occurrence for the entire portfolio, which is kind of wild. And I mean, I think the thing that lowers the volatility right now is the fact that SoFi is like 30% of the portfolio. So I want to whittle that down a little bit, maybe to like 24, 23%. And along with the cash, once I get out of the margin, and granted, it's not real margin. It's like if I got hit on everything, it would be in margin. But I'm like in profit on all of my cash secured puts because I rolled them out when they were so low. So I just need to sort of wait them out for the time value to decay off them, and then I can get out. But that whittling down SoFi a little bit, along with the cash that I'm going to spend, along with cutting some smaller positions that didn't go my way that I intended as trades, I think I'll have a good foundation to have Meta and also Amazon and maybe a little NVIDIA as well. How about yourself?
What happens when you're rich? Got the 15th coming up and another paycheck, and I think with that it'll be the same old. I mean, I guess I did not double down, I guess, but I bought 3,000 shares of VG yesterday.
Good man.
I woke up to a bunch of texts from an anonymous person, but they had bought a decent chunk of VG, so it inspired me to buy more. They had timed like the perfect. I will not disclose. It wasn't Mr. Patel, but it's somebody I don't know how public they want to be. So they're not on X or anything, or I guess they are on X, but they're not really like social media folks like we are.
Got it.
So but the
so Barron Trump.
It was his uncle. I thought Barron had an X.
What's that?
Isn't he like public on X and stuff? Is he? Not really. So. I don't really know.
Of Don Jr. or something.
Maybe. But what was I gonna say? So on the 15th, like always, I'm gonna buy some Palantir, some Rocket Lab, Bitcoin, Ethereum, S&P 500, Northern Oil and Gas, Granite Ridge, Dutch Bros, Amazon. Is that it?
Dude, it's just it's quite crazy to me because, I mean, I don't even know if these like bi-weekly paychecks even make a dent in your portfolio anymore. And regardless of that, you're still keeping to the plan, just stacking. Slow and steady wins the race. It's very admirable. Because if it was me and like the 2 week paychecks relative to the size of the portfolio, I think you're like public with like the size of your portfolio. Um, I just don't see how it makes a dent at all. But yeah, I guess you're right. It all adds up. It's just tough to see it in the micro. When you zoom out over 12 months, it's you can see the impact. But
Yeah, you zoom out and you definitely see it, and you know, it doesn't take much for small positions to become very large positions. And you know, I invest a good amount of money. I mean, I invest, how much do I invest a month? I don't know. I'd have to go back and actually double check, but I mean, it's a good amount of money. It's probably what most people's salaries are. Um, not trying to.
a month,
Um, yeah, I'm putting in each of those companies. It's like a couple $100 a month. I mean, it's so you think about it. Um, that ends up being a couple grand a year if you're at it, and you know, and then that's just like consistent baseline, right? And then, for example, like VG, I bought 3,000 shares yesterday. It's like 18 grand. So that's like out of the normal cadence, right? So if I see an opportunity where I'm like, you know what, I do need to double down, etc., then I
right?
will. So I don't know. Yeah, I mean, it all adds up, and you trim here, you trim there a little bit, and then you consolidate positions. It all adds up to me. I don't know. It's just what I've always done, and um, but yeah.
Yeah, I mean, I feel like we always come back to the same conversation around setting some targets for what that end game looks like, right?
Mm-hmm.
And I don't know. I just feel like it's the numbers less than what we think it is, like what our gut reaction is. And
You mean then, like when we've made it, or like what's enough,
well,
or what are you talking about?
I mean, you could do your job for uh, pleasure, for fun, but at the point where you can completely augment the income from your job in a passive fashion is when I would define it as you've made it.
Hmm.
So if let's say you make, I don't know, 6,000 bucks a month from your job, let's just say, right? Or let's say you make 9,000 a month from your job and you have 6,000 a month in expenses and 3,000 you just put away. Well, that 6,000 a month of expenses, if you all of a sudden had a dividend portfolio that was paying you 6,000 a month that you're withdrawing, that's like you made it by the traditional, sense.
Mm-hmm.
Now, with option selling, it becomes the aggregate number that you need becomes a little bit less because you can generate more of a yield through marginally more, well, more risk for sure relative to dividends. Um, but it's not like a crazy, I think so. Let's say 6,000 a month, that's 72,000 a year. You know, if you generate 10% returns, like you can do that with a portfolio of under $1 million, right?
Yeah.
So you get $1 million portfolio, you generate 10% a year, you make 100,000, you split that out over 12 months, and all of a sudden, you have met that target. And then you're thinking to yourself, wait a minute, like $1 million doesn't like it's not impossible. I saw somewhere that like 1 in 10 Americans are like millionaires. Of course, that's inflation, and of course, I would imagine their main property value gets included into that. But the point being, it's not like a crazy number, but somebody who might have a $6,000 a month expense on a recurring basis might feel as though, oh, I need to make 5 million or I need to make 10 million. And it's like, why? because they've never really done that mental arithmetic to get them to that actually low number, which is in reality. Am I making sense, or am I like?
No, 100%. I think a lot of people make it. It was having this conversation with somebody the other day. They're a little bit older. They're in like their mid 40s, maybe early 50s, and I'm not really sure. I try not to ask people, coworkers specifically, what their age is, but probably late 40s, early 50s, and they were starting to get a little bit panicked, and they know that I do well in the market, and I was talking basically verbatim what you were saying, right? I think you
Right.
need to start with the end goal and understand where you're headed, because otherwise you're gonna all plans are worthless at the end of the day, but they're gonna be more valuable than acting without any sort of direction. And with a direction, at least you can kind of head in a certain way and pivot from that. But I think if you are operating under no direction or no idea as to what you're doing, then you have you have a proneness to uh, be a squirrel. And what I mean is you see an acorn, you're going to chase it, and who knows if that acorn's actually going to have good fruit in it or not. And so I agree with you wholly. I a good rule of thumb that has always kind of been out there, and this is like really conservative, right? So people, like you said, like they can use that 10% if they want to, but the number that has been like classically back tested. Now, obviously, it's back tested data, not necessarily an indicator that it'll
4%.
work in the future. Is the 4%, and even more so, like that 4%, I think gets you to like 95% success rate over like 30 years or something like that. That you'll never run out of money based off of like 100 years of back testing or something like that. And
Yeah, the
sorry, go
thing to
ahead.
keep in mind there is that like the 4% is essentially where you're not burning down your base. It's
Yep.
4% a year is you're living off the fruit of what your portfolio generates per year. You're not burning down the lump sum you have. Drastically different things, because if you have, like, I read this book recently, it's called Die with Zero. And basically, the whole message is that, like, people accumulate wealth for far longer than they should if they were optimizing for dying with zero. And the idea is that you have a traditional arc, and in the beginning of your life, you start accumulating wealth, and you get to that, multi-million dollar portfolio, and everybody thinks like, first of all, I need way more than I currently like actually need. So we did the example of $6,000 a month in expenses, and it's like, well, you can do it with $1 million. You can generate $6,000 a month, no problem. But second of all, in this 4%, rule, let's say, first of all, that's based off dividends and it accumulates, or it accounts for volatility. So sure, you can say, I want to be safer. Instead of doing a million, I want to do 2 million. And then therefore I don't need to withdraw 10%. I can withdraw 5%. And that's way easier to get as a target. But both of those scenarios always assume that you're going to live off the fruit of your portfolio, versus if you are trying to die with zero, let's say, in terms of accumulating to a peak and then starting to burn down what you've accumulated, your number is actually way sooner than you think. In terms of, I don't need to retire at 65, or maybe let's say you struck, you did very well for yourself and you retire at 50 or 45. If your goal is to burn down your portfolio to zero by the time you're 90, right? Then all of a sudden you can start burning that down way earlier. Now, not everybody wants to do that because there's an inherent fear in doing that, because you're seeing your numbers go down on a monthly basis towards zero. But it's just another lens by which you can look at this problem. And I think it's kind of liberating to start thinking about it from that perspective as well.
No, it is, and I think another piece of it as well is hopefully, in this lifestyle, it's not for everybody, but if you have kids and stuff like that, and let's just say you're getting a social security, like my mom's currently in the stage, right, where she's like, well, I don't need all this money. I have a paid off home. I can pay the taxes. I have a couple rental property. Well, I guess the one rental property, etc. And she's like, I don't need this money or that money. And so she's like, if you guys want, I'm like, I don't need it. I don't, but Luckily, she's been able to set herself up with a hospital. She worked for hospitals her whole life, so she has a pension from that. She has, retirement accounts, and so she's sitting there like, oh, I actually didn't need nearly as much. And I remember having that conversation with her 5 years before she retired. That mom, you're good. Like you don't if you don't want to work anymore, you don't have to. And that fear, I think, of not having an income, I think was very scary because, well, to be fair, my dad was a little bit of a spendthrift, so he would buy a lot of other things like cars and guns and stuff like that. Typical American. But after he kind of passed away, and it was like, they're not accumulating all this other stuff. It was just like, yeah, you have a paid off home pretty much, and then you have a rental property that's bringing in income, and you really don't need all too much. Unless you're going on more vacations and stuff like that. But I
Hmm.
think a lot of times what ends up happening is when you're working, I think that there's this drift where you spend way more than you actually need to. And then when you're actually not working, you end up spending way less. And I think it's just like a normal thing. Like you don't need to spend as much on new clothes and driving and, all these small little auxiliary things versus, but yeah, I mean, I think a lot of people make their lives a lot more difficult. And I try to tell them that as well. Like, think about that. Think about what you think your expenses are going to be, what type of lifestyle, etc. And then act backwards. And you know, it's an interesting fact in reality because you and I had that conversation. It's just like,
We have this conversation all the time.
yeah,
Let,
like
let
Matt,
me add
why are you still working? I don't know. It's a good question.
well, let me add another layer to this because so kids is one of the big reasons why you don't want to essentially burn down your entire portfolio. I think one extra thing that I never thought about until I read this book was the deterioration of your physical health as you get on in years. If you make a list of all the things you want to do and all the places you want to go, there is a age limit. Well, there is a physical health limit to a lot of those things, and for many people that translates to an age limit. If I want to go do the Camino Santiago, like I was talking about with Michelle and Ray, or if I want to go hike a mountain, or if I want to go whatever skydiving, if I want to do all of these things, well, all of a sudden my health is naturally going to deteriorate, even if I try to be physically healthy and maintain a good lifestyle and not abuse certain things. And so let's just say I'm 65 and I've done all the right things and I've accumulated a $5 million portfolio, right? And all of a sudden I'm saying, okay, great, now I can generate 100,000, 200,000 easily, passively per year. Let me do all the things I wanted to do on that list that I made when I was 20 years old. I can't do half of those things. The time limit has surpassed for you to do certain things. And so there is sort of diminishing returns in how long you wait to quote unquote start living your life.
Yeah.
And all of that is predicated on the actual money. Like, do you have the financial means? Do you have the time? And do you have the physical ability to go do that? Anyways, it's an interesting thought because so many people are inundated with like corporate life 9 to 5 and they don't think about this at all. And the few people that do think about it predominantly from a financial security perspective. And so few people think about it holistically from all of their capabilities put together.
So where are we going?
Yeah, look, Charlie Munger. This is a great interview. I freaking love Charlie Munger, man. Last interview with Becky Quick. I mean, he talks about wanting to catch a tuna, but being physically unable to do so. And that's crazy. I mean, and Charlie spent a good chunk of his time, like until he was in his 40s or something, like as a lawyer practicing law. Like he wasn't even an investor until later on in life. So my point is like, even if you want to do a small optimization for the almost 300 people watching, let's just say you don't have the financial means to do everything on your list. if you stack rank your list in terms of what can I do when I'm physically able to at the top, and the things I'm least physically able to at the bottom, and then use that as a blueprint, then you're going to get more done of the list than if you weren't doing that exercise. If there's like, oh, let me go and see, have an espresso in Rome versus let me go hike this trail up in Chile, do the trail first. The espresso in Rome can wait.
Never
So
thought about
anyways,
that.
yeah.
It was. Well, they paid the big bucks, Tevi.
Well, I didn't mean for this to be a sentimental pod. I still want to talk about DGen sports gambling and whatnot.
No, I'm gonna go to Tide tomorrow. No, I would love to continue to do more. Yeah, people. I might actually be in the Middle East in February. That'll be cool because I've never technically been in the Middle East, so that'll be. It's not really the Middle East; it's more Eastern Europe, but we'll see. But yeah, I'm curious to see what ends up transpiring with that. That'll be fun. I don't know if I'm going or not, but if I'm not, then your boy needs to plan a vacation. So.
Yeah, you know me, man. I'm always down for vacation. I'm glad that you actually joined the stream today and not Steve, because it opens up this entire possibility of talking about travel. Where I went on Steve's stream a couple weeks ago and I talked about travel, and he was just repulsed. And I think a lot of the people were in that stream. He was like, "Why would I?" He's like, "I have everything I need in New York." I'm like, "Well, New York is not Dubai. New York is not Singapore. New York is not all of these places." And yeah. Just let me know where to next, and I'm there, man.
To me, it's about understanding perspectives. And so I feel like I told people this a bit, and I'm sure I've told you this. It's like I grew up a very American, chicken, vegetable, like not fried rice, chicken, vegetable, and like white rice, like for dinner, like 3 times a week. Didn't have Indian food till I was in college, like small things like that, where you're just like, okay, I kind of grew up with my Irish German background and didn't really sway from that, so when it came to realizing that, hey, there's a lot of other really cool people out there. I met some people from China and Japan and India and all these people. And I met some of them as well in high school, but it was definitely like a predominantly white high school that I kind of grew up in. It was kind of like a wanting to kind of see all these different perspectives, and you see how people treat saving and live, and they're still happy. And so to me, it was always this kind of understanding is it's like, well, maybe these people know something that I don't. I would love to just see that. I'd like to get a little culture shock because I didn't really have any of that culture to me. So when I had the opportunity to go to Trinidad and live there for some time, I was like, yeah, sure, let's do it. Like I'll live anywhere for like a year to 18 months. Like if they were like, Matt, we want you to go to, I don't know about Antarctica, but if they wanted me to go anywhere for 12 to 18 months, I'd be all about it. 3 years, I've said like, 3 years might be different, but 12 months to 18 months, like I feel like I'd pretty much go anywhere.
Yeah. It's really interesting because again, it doesn't take a lot for you to just through the process of osmosis absorb so much of these different cultures. I guess people don't know this about me, but right out of university, I went and I worked for a nonprofit, and they had offices around the world. And so I found myself in the span of 2 years living in 4 different countries, just 6 months here, 4 months there, 8 months here, and they were across different continents, and it was just so interesting, right? Because you, in the span of like 2 years, it's not even a long time in the grand scheme of things. You come back and you've seen all of these different ways of life. You've talked with all these different people, and it's just it's very eye opening. And so I think like I'm a huge advocate for travel at all stages in life, and that's a big reason why it opens your mind to new possibilities, and you can bring a lot of those ideas home and think outside the box for whatever goal it is you want to achieve.
I think also it gives you a new perspective on your personal life as well. Like, oh, like living in America. It's not just about learning about other cultures. It's about learning things about your culture that you've taken for granted. Like prime example in like Trinidad, um, they don't have Walmart, right? You can't go somewhere at like 2 a.m. and get light bulbs, you know, like and same thing with the UK. Like there are some places that are a little bit more westernized now, but it's like you can't just go somewhere 24/7 like you used to. And to be fair, that's kind of changed in the United States as well with the pandemic. You know, all Walmarts I feel like used to be 24/7, and I feel like it's not so much like that way anymore. So I don't know. Like I think you don't know Tevis. You don't know what's potentially like something that should be natural in your life or should be kind of praised as I don't know what's the right word I'm looking for, but yeah.
Yeah, there's a certain admiration that you have for it that you grow through repetition of doing it. And the crazy thing is like the more you do it, the more you want to do it. Travel, that is, right? Uh, and it becomes easier, right? Because you always have points of reference. It's like if you learn one language, the third language becomes, or let's say I speak English, I learn Spanish. Whatever I learn next is going to be a little bit easier because I can find patterns in my second language that will help then accelerate my learning for my third language and so on and so forth. Anyways, let's talk stocks. People want to see us talk stocks, and that's what we're gonna do. Let's see. What do you want to talk about first? Do you see a MIT bot VG?
Going to zero.
All of a sudden, it's going to zero. I mean, it's at all-time lows. So, is it going to zero, Matt?
Depends on the eye of the beholder.
Yeah, I guess. I mean, it depends on how these lawsuits go. I guess, right?
Yeah, I can't talk too much about lawsuits with VG, but I think it's really just depends. Like, and one of the key things that I've been like chatting about is I think a lot of people are concerned about the short-term headwinds, and I always knew that the IPO price for VG was over, right? And I remember having this conversation with Chris Patel when they originally were like, "We're going to IPO at," I think it was like 110 billion. I was like, "I'm not touching that with a 10-foot pole." Like that's fully 110 billion was, I think, where I think a base case would be for the company in like 2030 and beyond. And so I was like, not touching it. And then when they IPO'd at 40, I was like, yeah, I was like, it's a little overpriced, but for where they will be, I was like, I still feel like it'll be a 2.5x, you know, in like 2030, 2035. So I was like, you know, 250% return in that amount of time. Like you'll still end up, you know, making decent money. I was like, it's a good place to kind of put money. Now it's like stupidly cheap.
Yeah.
So for anybody that has the time horizon, I mean, it's really up to them. But I think the problem is I've always bought this company with a long-term 20, 30 plus time horizon, and then you have people coming in that have different expectations on how to invest. People that think, oh, I need money in 6 months to a year. They say, well, Matt's, as you put, you know, people kind of know that I'm in a good situation financially. Like Matt's obviously done well in the market. He's done well with Rocket Lab. He's done good with Palantir, and they might only have seen the positive times with Rocket Lab and Palantir. They might not have seen when I was down 30, 40%, pounding the table, being like, look, like it's coming, everything's moving in the right direction. And it's, you know, I think a lot of people are like, Matt, you can't compare that with what's going on at VG. And it's like, but SoFi did the same thing. So you're going to tell me that all these companies are different? No, I think a lot of these is you'll see companies that fall out of favor, and you know it doesn't mean that they're actually going to zero. You know, it just means that are you being unrealistic with your time horizons? And I would say most people are. And they're trying to say, oh, well, Matt's buying it for 2030, 2035. Let me disregard that. Let me buy it. Matt, what are you thinking for 2026? And I'm like, I don't give a shit about 2026. It's not why I bought the company. I bought the company for what's going to happen in 6 or 7 years from now, and maybe even 10. And you're trying to put what I want to do, let's just say a square peg into your round hole, and it just doesn't work. And so I think a lot of people need to do some self reflection when it comes into this. If you want results in 6 months to a year, I'd say to sell the damn stock, even if you're at a loss.
Yeah.
Um,
So it's interesting, right? Because the chart is in free fall. I want to bring up this comment. I can't back VG in the way the chart looks, has no support to bounce, and like that's definitely one aspect of it, but that's very short sighted as well, right? Like, oh, is it a good price entry for VG? Like this company is going to do what, 12 billion in revenue, and they're 14 billion in market cap, and
mhm.
so the way that I think about it, it's incredibly cheap, and you're not even pricing in any forward growth. And this lawsuit overhang is so large on them that I guarantee you that once VG bounces, the lawsuits are going to, get resolved one way or another, and that's going to get priced in. And there's a good chance that there's a ton of upside as a result of the lawsuits that's not being priced in right now. And you're going to get VG to bounce, and it's going to bounce from 6, it's going to go to 12 or 15. And people are going to then say, oh, well, is it a good time to buy? And they're going to be chasing. And that's just the reality of the market. It's not specific to VG, it's across the board with regards to people's fear. And we're at max fear right now for VG. And also their greed once the actual landscape changes. And that can happen overnight. VG can come out on Monday and say, hey, we resolved these lawsuits and the stock's going to jump, 20% intraday, and people are going to say like, oh, did I miss the boat? Is it going to go back down? So I think that having a longer time horizon really smooths out that decision making process and removes the emotion out of it, because the numbers tell a story. And right now the story that the numbers are telling is that this company is incredibly cheap relative to the revenue that they're doing, and they have nothing. The market is pricing in nothing in terms of the forward growth that they have ahead.
Yeah, they have a lot of opportunities still to grow where they're at with Plaquemines, their second facility. Their third facility hasn't even started yet. Um, so yeah, I think it's going to be a great opportunity. I think this is just my thought process around the whole thing.
Mhm.
Is it was overvalued at IPO. I can understand that it was $25 a share. And the way I view it as is the environment has deteriorated a bit in terms of spot pricing, but this company is signing long-term deals that get the majority of their revenue and earn real money, you know, without any sort of real risk associated with it.
Mhm.
So the fact that you have a lot of these things contracted already, and then there is some spot pricing, which obviously would cause volatility in the stock price. But I think it's all these things that is kind of a perfect storm that allows people to say, all right, well, we're already down in the position. The environment's currently crappy. Liability will take some, or litigation might take a little bit longer. So we can dollar cost average this. And so I think a lot of people, or not dollar cost average, tax loss harvest this. So I think a
Yes.
lot of people are taking their losses today,
Yeah.
selling it, and then hoping for when the business, the environment, the litigation all kind of take a turnaround, and then pile into it in the future. Because it's interesting. I still think you see um, a lot of institutions still potentially buying in. So I
Mhm.
think what you might be seeing actually is institutions selling, which is causing retail to sell, which is then causing. But then at the end of the day, somebody's still buying the stock because it's not being bought at zero; it's being bought at $6, $7. So obviously,
Mhm.
there's somebody stepping in. I know somebody that just bought a substantial position. I added 3,000 shares, so there are people that are bottom feeding this. Um, but I think it just really depends. I think what you'll need is you've been on this long downtrend for European natural gas prices, Japanese and Korean natural gas prices, and once you start to see a turnaround in the opposite direction, it's going to provide a very big floor. And I think with that, you'll see the stock really start to move. And I'm cautiously optimistic that'll be in February or March timeframe.
Yeah, I think the tax loss harvesting makes sense for not only VG, but all companies that have seen drawdowns this year. Is people are going to sell so that they can write it off on their taxes, and they're going to have a 30-day period to avoid the wash sale, and then they're going to buy back in. And I mean, look, I can even, let's say I have losses on BG, I can sell my position, and I could just buy some leaps instead for a much smaller amount of risk capital, and all of a sudden I still have exposure to the upside. So that's also one way that investors could potentially play it. It's interesting as well that, um, you know, even for the average investor, let's say that doesn't know what VG does, they just see a distressed asset right now that's going through some, some period of the market hating them essentially. I mean, look, even if you buy this thing right after a lawsuit has been resolved, you're going to miss out on a lot of the gains, but it's still been sold off for so long that you're still going to have a lot of gains ahead. Because when the market overcorrects to the upside and to the downside in terms of the moves that it makes, the volatility that it has. And right now, I just think that for VG, absolutely can go lower, but I just think we're in that overreaction territory.
Yeah, and I think so many people are used to investing. And yeah, I can't talk about the lawsuit stuff, guys. So apologies. I mean, if you think about it, I work in oil and gas. I work for a company in oil and gas, and so that's all I'll say. If you need more spoon feeding, then as to why I probably can't talk about the lawsuits, then I don't know what to tell you. But the uh, the thing that I think a lot of people don't think about is yeah, they have debt on the balance sheet, and I've seen so many people come out to be like, "Oh, there's so much debt," and this, that, and the other, and it's like they're not doing the true due diligence. They just see something, they get scared. They know enough to be dangerous, but not enough where they can hurt themselves. Like, or sorry, they know enough to hurt themselves, but not know enough to actually be meaningful and dangerous with that information. And so they're just like, oh, hi, debt, I'm done. And it's like, well, did you actually look at what the interest rates are? Did you actually look at, when future revenues are supposed to come online? It's like building a house, right? Like, unless you're building it with cash, like you're not going to be able to get rent money until the house is actually built. It's the same sort of thing. They're building a third entire facility that's going to be their biggest facility. And you're sitting there being like, oh, debt. Oh my God. I'm not touching that with a 10-foot pole. And it's like, well, I didn't realize that you live in a house that's fully paid off and you have a car that's fully paid off and you went to college and paid for that in cash. And so, I'm not trying to be a dick. And I think a lot of people are like, Matt, that's like, it's completely different. It's like, is it? Like, you just expect everything to be paid for in cash. Like, it's just not how the world works. There's good debt and there's bad debt. So,
If a company can uh, generate more return on investment than the interest that they're paying on their debt, generally speaking, that's good debt to have. So like, SoFi recently did a raise for 1.5 billion. And it's not the same thing because you're issuing shares and diluting shareholders. It's not necessarily debt that they're raising, but the 4% dilution is something that all SoFi shareholders have to live with. And my justification for it was, well, if management can use this 1.5 billion to get a yield that is over 4%, then it'll be accretive to us as investors. And so similar with debt, if the classic Dave Ramsey example, right? If you give me $1 billion at 0% interest, I'll take 10, please, because you can put them in the safest thing possible and generate a spread of like 1% APY, and all of a sudden, you've created for yourself $1 million a year, something like that. uh, it's just so easy to do because like debt is not a blanket black or white thing. It matters the percentage that you pay versus the utility of the cash that you borrow.
no, precisely. Yeah, I mean, and it's an interesting one because the debt rating of the company is getting better as the EBITDA grows. If you think about it, they used to have before they started the first facility, they had an infinite debt to EBITDA ratio. It was infinite. And then as soon as they started It's now dropped, and then when they first started the second facility, it was they have a 20 to 1 debt to EBITDA ratio, and now it's 5 to 6 times. So imagine once the third facility comes online, how much
Right.
profit that's going to be generating. What's the debt to EBITDA ratio going to be? And you have
Right.
all these other companies. You have these real estate companies, pipeline companies, all generating 5 to 6x price to EBITDA. But you have this company that is currently at 5 to 6 EBITDA, and everyone's freaking out. And it'll actually get better with time, probably closer to 3 times price to EBITDA once they bring on the third facility. But they want to get a little angry. I get it.
I mean, so many of these metrics are backward looking, right? They don't account for the forward growth. And so these high growth names seem really expensive when you look at them from like a trailing 12-month perspective. But when you look at them from a forward projections perspective, they look more manageable because the growth rate is so high. And that essentially forms the delta.
Yeah, and I get the question all the time, VG or next, and I think that once again it goes back to your personal preference. VG is making a good amount of money in terms of EBITDA, but next doesn't actually make any money as of yet. It's pre-export. It has yet to export. It's allowed to build the first 5 trains. The first 3 are actually being constructed. The 4th and 5th have just been approved by management. And there might be an additional 5 trains after the first 5 trains, which actually might make that facility one of the largest in the world. But that is up to the person that's investing, right? Like VG is actually generating billions of dollars in EBITDA, potentially $6 billion, $7 billion this year in EBITDA, versus Next doesn't produce any EBITDA at the moment. So yeah.
Yeah. And of course, for more VG Next and all things oil and gas, follow Matt at the Cash Flow Chronicles show, because that's where I found a lot of the great DD around Next specifically on one of your recent episodes this latest season. Let's pivot, Matt.
Sure. And no, I don't worry about market dips. I actually enjoy market dips. Sorry.
This. Yeah. Matt is not really desperate for the cash that's in his portfolio right now to spend. That allows him flexibility to be long term. As a result, the short term dips don't really matter because he is Matt Money. All right, pivoting over. Let's talk about this Warner Bros. Paramount Netflix fiasco. Netflix, we're seeing its largest drawdown in 3 years. Paramount is now the front runner to close the Warner Bros. Acquisition. They're 52% chance on Polymarket here versus 37% chance of this closing by June 30th, 2027. Kind of interesting given all the developments that we've had since November when Netflix originally made that announcement around Warner Bros. And then David Ellison, the CEO of Paramount, jumping in there with a hostile takeover bid to shareholders directly. And now Paramount is the front runner there. Of course, we know the administration has a little bit of a bias here. What have you been following this, Matt? What are your thoughts on this?
A little bit. The one that I think actually should be a bigger person in the race was one that has less than 1% in there. I think Comcast really needs to figure out what the hell they're doing. And so, yeah, I think, I don't know. I'm curious what the hell Comcast is doing, because we're talking about companies that are trading at dirt cheap prices. Comcast is one that just absolutely prints money. And I just don't understand why they haven't put up more of a fight with respect to this, because they're obviously going through cord cutting and people wanting to transition over to, and Peacock isn't doing the best, right? So for people that are following, Comcast owns Peacock, and Peacock pretty much is, I don't think they really have their own natural specific shows. I think that they more so just recycle what they put on NBC and things like that. So I don't know, just a little bit confusing to me. But in terms of what's going on, I don't really know and have too big of an opinion. I think to me, it's more about the IP and kind of the Disney route, if that makes sense. Like Disney is very much about maintaining the IP of things and being able to take that out. They take like a long term century sort of view on some of these things, more of like a Japanese business mindset. Like, what are the things that you're going to be able to write IP around for the next 20, 30, 40, 50 years?
Right.
And you think about Warner Brothers, they have HBO, they have all these other opportunities in there that they could potentially use as IP, forever, that people may or may not be familiar with. They can just recycle shit, like it's pretty insane when you think about it. Like, you have all the Looney Tunes, you have so many different brands underneath this Warner Brother Discovery. Um, so anyway,
I mean, dude, look, like Star Wars, I think is a prime example, right? Like, think about Star Wars. It was a series of films, and that was kind of it. And all of a sudden, the moment that you got Disney Plus, you restarted that IP franchise all over again. And now it's like you have animated TV shows for Star Wars. You have Mandalorian. You have like 3 or 4 different Star Wars universe type of shows all on Disney. And it's like, well, if Netflix buys Harry Potter, right, which is owned by Warner Bros., or Sopranos, or Game of Thrones, like you could
you start
see
so many spinoffs, so
you could
many.
see spin-offs. Exactly. That's my point. It's like people are already invested in that universe. And so you can essentially just and if you're thinking about like return on investment for Netflix to have Netflix originals, it's like hit or miss, right? But for Netflix to pump the money hose into existing franchises and do a Game of Thrones spin-off, you're guaranteed to have that at least hook a couple of people to watch episode 1. Now, if they watch episode 2, 3, 4, that's on the back of how good the spinoff is and how good the writing is and directing and whatever. But everybody's going to watch episode 1 on the back of the IP itself. And so I think distribution is the only edge. And it sort of makes sense for Netflix to want to pursue some IP because it's so sticky right now. And Disney's proving out that model with Star Wars.
Yeah. Yeah, I don't know. I think it's an interesting one. Um, lots of different avenues around it, but I understand why also that the Ellison side and they don't want to necessarily, because you know it's just good business to buy it. I mean, think about HBO. HBO is like this. I don't know. It has its own. It's HBO is its own entity that really just continues to churn out high quality content, and I don't know why it's been tossed around so many different times, but HBO is just it's a quality base. I like what you said with The Sopranos. Like, I would love to see more of those. I mean, maybe I'm biased because it's one of my favorite shows, but it's I'd love to see more potential spin-offs about stuff like that.
Yeah.
I don't know.
And then you have like the entire other side of this, which kind of makes it a really interesting uh, drama-filled acquisition target, is the CNN side of things ahead of the midterms, right? And I mean, of course, Trump came out and said CNN must be included as a part of the sale because I mean we know Netflix doesn't want CNN; they don't have a use case for it. So time will tell. It's going to be really interesting there. Let's cover one more topic, and then I really want to jump into some questions for the audience. We are at that hour mark. This is the next topic that I want to cover here, Matt, and I want to get your thoughts on it. So 2026 is going to be a massive IPO year. These are some high target, high value names that are set to IPO in 2026. Elon basically confirmed SpaceX IPO. $1.5 trillion is really, what we're looking at from a valuation perspective there. And as we know, OpenAI and Anthropic are both going to be setting to IPO. I think this is a little bit outdated from Bloomberg, even though it's on December 11th, because OpenAI was eyeing $1 trillion, and Anthropic, I believe, is around $500 billion or $300 billion. And then we have ByteDance, so TikTok's parent company, Databricks. Databricks is going to be really interesting from as a Nebius shareholder as well, due to ClickHouse. And then we also have Stripe here at 107 billion. What do you think, Matt? Is there would you buy any of these IPOs? Are you excited for any of these IPOs? What are your thoughts in general here?
I don't know how. No, I don't think crypto has bottomed. I don't know where SpaceX's revenue has gone over the past several years. The last I checked in, it was over 12 billion, and they were planning on growing that by 50-60%. I don't know if that was 2 years ago or 1 year ago. So I'm curious at what revenue they're at right now, and also how much they're growing Starlink. Starlink is exploding like crazy in terms of people adopting to it, and specifically in rural areas. Like my family uses it now, because the who were we using? We were using Frontier Communications, and they were just dog shit in rural Pennsylvania. And so we're just like, you know what, we're tired. They kept going down. So they just use Starlink, and they haven't had an issue ever since. So I don't know about SpaceX. Maybe I'd be pleasantly surprised at how much money they're generating. But to give people an idea, the amount of net income you need to generate to be worth 150 billion, that's like slightly less than Meta, slightly less than Amazon. So you're talking about $100 billion worth of EBITDA. Now, of course, if this thing is growing like crazy, and they have plans for monetizing Mars and all that, and what kind of revenues can be generated with that, coupled with just premium. Like, of course, if it's the premier satellite based internet service provider that you can use and take with you around the world, then that has a premium on its own, rather than having to get charged every time you go to a new hotel or something like that, right? Like, you might just be like, yeah, I travel a lot, let me pay an extra $10 so I can have universal internet no matter where I go. That might be a product that they could sell. And if you have however many people on it, anyway, so just some small things like that. So it's hard to say if 1.5 trillion is really worth it at the current price. I mean, we were talking about 400 billion. I could understand and get to the numbers pretty easily, but without knowing the trajectory. OpenAI, that one's still a little bit confusing to me, considering the revenue is still so low. ByteDance as well. I don't know what kind of income TikTok generates. So to be 480 billion, I think it's pretty crazy. One that I'm kind of confused about, so I'd love to see the S1 for Databricks, is how they're at 134. And I remember not long ago, people were like, oh, the valuation on the private market for Databricks is pretty comparable to Palantir and, all that. Now, obviously, that's, now been leaving Databricks kind of in the dust with respect to the current valuation of Palantir, whether or not you believe Palantir should be up there. But our experience internally at our company, and I can't say too much about it, obviously, but we are cooling off a good bit on Databricks and continuing to deepen our partnership with Palantir. And so maybe that's just a single individual's bias, but I just don't see Databricks being as revolutionary and getting us the results. Is it still allow you to connect up data pipelines and things like that? Yeah, of course, but it doesn't add that extra wow factor that truly fundamentally changes your business and how it operates, if that makes sense. It just makes things slightly faster. So to me, it's nice. It allows you to get to your data a little quicker, but it doesn't actually change the way that you utilize and work with the data. Stripe is another one that I continue to see being more and more used throughout the world. And so I'm really curious on their revenues and their income statement, because depending on where you're at, this could easily compete with the Visas and MasterCards of the world, not entirely, obviously, because you don't have the credit card aspect of things, but a lot of things go through Stripe. And I'd be curious to see what kind of revenues in everything they generate.
Yeah, I think SpaceX is absolutely going to be the most overhyped name there, just being another Elon company. The market is really going to give it a lot of credit. All of these companies are going to be crazy premiums from a multiple perspective. OpenAI at $1 trillion, like I personally would not touch that. I haven't tried 5.2 yet, but I think all of these models are very much leapfrogging each other on a monthly basis. And so it doesn't really give me confidence to say that OpenAI is definitively going to be the winner, especially because it's becoming a more even playing field from a market share perspective every single year. Anthropic is probably the one I would be the most interested in. But again, I would have to take a look at their actual filings. ByteDance, I'm a little bit confused about. Like, is that just the US subsidiary,
Good point. I didn't think
or is
about
that the whole thing?
Good.
Because if Oracle owns the US subsidiary and this is just the international, go ahead.
Sorry, my computer disconnected for a second.
Yeah. And then in terms of Databricks, the main reason I would be looking at that one, not necessarily to buy it, but I would be looking at it from a ClickHouse perspective, because ClickHouse is, in many ways a competitor to Databricks, and ClickHouse is partially owned by Nebius, and it's a fraction of what Databricks is. And so if Databricks does very well, I think it's going to signal strength for ClickHouse as a just high performance analytics database product in the market. Stripe is one that I would be interested in, and I obviously need to see the filings, but Stripe is, I think, the most reasonably priced on this list. And at some point in time, a couple of years ago, it was like the most valued private company in the world, and then it got lapped by SpaceX, and then it got lapped by all the AI, startups. But I still love Stripe, and I think there is a place for them in the public markets. I think all of these, though, are going to be massively overpriced the minute that they hit the public markets. All right. With that said, shall we do some questions, Matt?
Yes. You know what upsets me, Tevis, while people are getting their questions for me, queuing up? I'm upset, Tevis. You want to know why?
Because you're going to lose this bet?
Well, that. So I'll never financially recover from that. But
yeah,
the mortgage company I pay my mortgage to, they paid all my taxes for the year.
Okay.
Mother effers kept, as you may or may not know, in the U.S., like when you have a house, you pay an escrow account. So when like taxes or insurance or whatever needs to come through, they can just pull from that account. So you're basically like pre-funding it to an extent. And his mother effers, man. It's obviously the end of the year. I paid my first of the month mortgage payment, and then all my taxes for school, etc., have all been paid. I got to check my escrow account. Got like $2,000 in it, Tevis. It's $2,000. Like I overpaid my escrow account by $2,000. I want that $2,000. I want interest. I want heads to roll, Tevis.
That's so silly that you have to do it through an escrow account. I don't know how it works in Canada. It might be the same, but it's kind
really
of
not that big of a deal. But I was just kind of like, I can't wait to get this check. I don't know what I'm going to do with it. I'll probably use it to pay your $500 because I'm broke.
$2,000 is $2,000. That's a trip to Mexico, man.
Well, that's a cheap trip. We do better than that.
I mean, well, all right. Where's Travis?
My money, I need it now. Sorry.
Travis's favorite place. I don't know. I like Japan. Japan was cool. Guatemala is really cool. Morocco is cool. Spain is cool. Those would be the first ones that come to mind. Matt, are you going to do a rocket? Are you going to stream Rocket Lab's launch today?
I thought you got delayed.
What, another Neutron launch? What is this?
It's Electron, Tevis.
All right, well, I know things.
Tomorrow. They pushed it to tomorrow.
All right, there was a couple questions around QE. Matt, do you think QE only helps for the big four banks and private equity?
I think it helps everybody to an extent, because if you're thinking about it, it has direct correlation to what interest rate you're paying on a 10-year, and so before they were kind of just letting it fall off. Now that they're going to be potentially reinvesting, I'm not 100% certain as to what they're going to be reinvesting that money into, but exactly that, right? They're going to be potentially putting it into other products, which is going to deflate the interest rate on those products, which has a turn, right? So mortgages, for example, mortgages generally for 15 to 30 years are based off of the 10-year note in the United States. And then there's a spread on top of that. Now that spread can be anywhere between 1.5% to 3%, and it's gotten really bad at 3% back in like 2022 when the interest rates were expanding like crazy, and that's when you saw like 8% interest rates on 30-year mortgages, etc. But now it's starting to shrink again. So if you start to think, if that mortgage rate spread shrinks on top of the 10-year and the 10-year shrinks, that's where we could actually potentially, if this continues in the right direction, get into the high 4 percentage points again for mortgages in like 2027, 2028. But I wouldn't be surprised, with this QE, depending on how aggressive it is, if in the short term, meaning like the next 3 to 4 months, you might be able to see 30-year mortgages enter into the high fives again. Currently, they're at like the low sixes, or sometimes even flat at 6% that I've seen. So that's just an example, right? Now, if you're not flooding the market and you're kind of just tapering and you're letting it do its thing, maybe the 10-year climbs. And unfortunately, that gives you a floor for what mortgage prices could go to. So,
yeah, I think
that's an example.
I think the high level there is obviously QE is going to help everybody across the board. It's going to help equity markets. The market as a whole generally has gone more risk off as we get QE. It's going to help liquidity. So, and then, yeah, obviously from that perspective as well. So we'll see how the markets obviously react once it does happen, but it's a bullish catalyst generally for equity markets. Are we still bullish Bitcoin? Yes. Matthew?
Yeah, I still am cautiously optimistic there's going to be a peak within the next 3 months or so, but 6 to 9 months, maybe even 12. I guess it depends on what the price action looks like. You can never really formally predict these things, but I believe we'll be in the midst of crypto winter. I've been thinking that the end of 2025, we would kind of be entering that stage. I just feel like there's just one more pump left before we enter that stage.
Tevis, do you still like hymns? Do you have any idea why Prophets was missed? Yeah, I think hymns to 100 is going to come down as like my worst prediction for 2025. And quite frankly, it's a mixture of macro headwinds that they have, as well as company headwinds. They're going to really struggle, I think, to meet and raise their guidance consistently. Obviously, they have tough comparable periods, but as well, like the GLP-1 headwinds that they have from a macro perspective with regards to Novo and Eli Lilly, as well as the product offerings with regards to menopause and testosterone that rolled out in October, November. We still need more details around how the ramp is going for those. I think the pros that HIMS has on their side is the HIMS Labs announcement, the blood testing through Tribe, Canada expansion, and also now this new acquisition that they made last week. But largely, the market is not as confident that HIMS is going to meet and exceed their growth projections. And so that's why it was sold off. And until those concerns are alleviated, then I think it's going to stay range bound to a certain degree. It's not going to make new all-time highs. Then you also have the sort of macro lawsuit risks for Novo. And yeah, so I think there's a lot of unknowns for HIMS right now. There's a lot of open, outstanding question marks. And so we need those answers first before we can go higher.
So they pay the big bucks, Tevy.
Yeah, I think short interest on HIMS is still like 35% ish SAGIG. It's not like it's mid 30s is the last time I checked, which was a couple of weeks ago. It's still insane levels of short interest for HIMS. I actually think I have a chart here for HIMS short interest that I made. So let's take a look at this really quickly. What do I want to do here? All right, so
let's give them something to talk about.
Here we have the HIMS short interest versus stock price. So this is the chart that I use to make the posts around HIMS. And as we can see here, the green is the short interest over time, and the red is the stock price over time. So even as the stock price has declined from the October 15th snapshot to the November 15th snapshot, the short interest has stayed around 65 to 70 million shares sold short, which equates to about 34% short interest. And so you can see the short interest here over time has gone steadily up, SAGIG, and it's peaked around the 70 million shares range. And we're going to see where that goes. Of course, in moments where like stock price has shot up, like here, you see short interest going down and shorts covering. But then when the stock price goes down, you see shorts accumulating again on HIMS. And largely it's as a result of those catalysts and headwinds that I was talking about earlier. All right. Do you want to answer this, Matt? I don't think I have an answer for this.
What are hobbies?
Yeah.
Cigars, looking at women. Sorry.
Yes.
Cigars. I like to try new places, try new foods, meet new people. Harass Tevis. That's a good hobby of mine. Especially on Bootleg Weekly on Tuesdays.
Traveling.
What else? Yeah, traveling was a good one.
It's a goodie.
What else?
Yeah.
I don't drink very often, but I will say I do enjoy a great scotch from now and again, and I love a good old fashioned. So I don't tend to drink during the week, but I am a social drinker, and I love the taste of a good old fashioned. Not what it does to me. I'll generally limit it to like one or two, unless I'm with Tevis and I can really kick loose. But yeah, I mean, you see me even even when we go on trips, like you don't normally see me like overly drunk. I just normally enjoy it. I like the daiquiris and the rum punches and stuff. Although that one trip when we made some real moves, maybe we should get more drunk because that was when we were buying Rocket Lab at 4, and you were telling me to buy SoFi. That was a very profitable trip for both of us.
I remember that trip. We were having fish tacos every day at lunch, and cigars right after lunch, and a little nap, and then drinks at night. It's great, man. Great trip.
Yeah, I think I drank a lot more on that trip. It's because I had Miguel.
Yeah.
Miguel.
Hope that guy's doing well. I think we hit all the main ones. Cigars, a nice drink, looking at women, traveling. Now, watches. I've been getting into watches lately.
What kind of watches, Tevy?
The ones I'm too broke to afford, Matt. Those kinds.
Did I ever tell you the story about how I wanted to go like up? So I bought my Rolex with which I don't regret because obviously the Rolex holds its value, and it is a fake Rolex though. But like I bought my Rolex with like my what was it? My signing bonus for work. So I was like, shit. I was like, this is awesome. I was like, what can I buy? So I do need children. You're not wrong. I'd love to be a father. I don't know how I would do it because I could barely take care of myself. Now my mom says that. I'm like, nope, they would be knocking. Where's my check? But yeah, I bought it, and then so anyway, I've had my Rolex now for like 12 years or whatever when I first kind of started working. And when I came back from Trinidad, obviously when you're living in as an expat, you have very little expenses. Like your expenses are like buying yourself food,
Yep.
and like travel if you want to do extracurricular travel. And so I was like, you know what? I was like, I think I'm good. Like, 29 years old, moving back to the country, and I got some extra cash. I was like, let me go to the AP dealer. I think it was AP.
Oh.
I think I went into the AP dealer and I was looking around and like, here's our entry level models. And I was like, these are nice. I was like, oh, and this is the mid level. This is kind of like the mid to get into the higher. They didn't obviously have any massive pieces, but I was like, all right. And I was humbled extensively. And I said, Maddie needs to get back to work. And I've been working. So now if I wanted to, I wouldn't feel as bad. But back then, it was I'll say pre 7-figure days for your boy Mateus. And so I was a little bit humbled walking out of that store. Anyway.
Yeah, you realize real quick there's levels to this shit.
Yeah, that's exactly right.
Yeah. So yeah, I mean, look, I think it's nice because it's not necessarily something that you have to, buy all the time, but as a token of a certain milestone in your life or a certain event in your life that you want to commemorate, I think it's really nice. And there's a lot of variety to express your creativity, to express your personality. So that's why I've been getting more interested in them, but it's definitely not a cheap hobby. And I think a lot of hobbies aren't cheap. It depends on
I used to think so before when I was kind of like around that time as well, 2019, 2020, 2021, before I kind of hit that 7-figure mark, I was like, you know what? I was like, every million that I hit, I'm going to have a bottle of Dom Perignon that's like, you can get them like engraved.
Yeah.
And like I never ended up, like I bought the first one for when I hit 1 million and I just never popped it. Like it's just sitting there. So it's probably bad at this point. No, I'm just kidding. But it's sitting on its side somewhere. But now that I'm thinking about it, man, like every time I need to celebrate a couple of those milestones. So next time we go on vacation, I'll need to buy us a nice bottle of champagne.
Yeah. I mean, just to bring us right back to the beginning of our conversation, you could still pop those bottles if you want to, at some point in your later life, burn down that massive wealth. And the moment you cross 1 million, going in the other direction, you pop that bottle.
Tevy's very influenced by this Dying with Zero book.
Yeah, I mean, it
was on my grandfather's desk. It's a great book. I need to buy it. I know on a person.
Yeah, I mean, I don't necessarily agree with everything, but I think even if you take a little bit from it, it's eye-opening. Books that make you think. So, there you go. That's another hobby, and that's not related to markets.
Books that make me think. I just finished the one. I was on beach with you, reading it, and I finally got to finish it. I don't know why it took me.
Psychology of Money?
6 months. Yeah, finally finished that.
You bought the How to Spend Money book?
No, there's a bunch I need to catch up on, but I just bought this one. This thing is huge. My one coworker. So my dad, give it a little pre-story. My dad was, I literally just ordered this. My dad was obsessed with the Rolling Stones.
Okay.
And great band. If you don't know, the Rolling Stones are classic. Even if you don't know the Rolling Stones are, you've heard their music. It's in a bunch of movies. They always have Sympathy for the Devil and so many different tracks in throughout many movies. So, but anyway, Keith Richards is their guitarist, and dude is like a fucking madman. So anyway, my one coworker was talking to me um, about he has a biography out. So I bought that. I bought one for me, one for my mom. So I'm curious to get into that.
Camera. I want to see what it is.
Life by Keith Richards.
Nice.
So it's his biology, I guess. Not biology, biography. So that'll be fun because he's lived a crazy ass life. Booze, women, drugs.
I'll show you what I'm reading. Desk. Great freaking book, The Trading Game by Gary Stevenson. It's like this guy, he does YouTube videos now, actually. He was like one of the youngest traders working at Citi, and he was one of the most profitable traders. And he talks about his experience around like trading as he's like a 23-year-old or whatever, and they're making hundreds of millions of dollars for the bank. And it's just crazy, man. It's like the guy made so much bank, and then he just quit everything. And he was saying how like these guys don't want you to leave the game. Like they are so intimidating you and all this other stuff. So yeah,
it's an interesting world, man. There's like I was actually talking this about my mom the other day because like I have a pretty good job at where I work. I mean, I've told you, you know more about it than obviously the chat does, but I don't have like a non-compete or anything like that. Which, in retrospect, with where I'm at in the company, like I was kind of like wouldn't be stupid for the company to give me a non-compete because I kind of know where the barrels are. I know the global portfolio pretty good. So anyway, not getting too much into it, but the like the finance world, they're like all about non-competes. So like I know people that they're like, oh, I'm going to work for this company now. I'm leaving my old firm, but I can't work for 18 months. I'm like, what do you mean you can't work for 18 months? Well, my new company's paying me, but I have a non-compete, so I can't do anything for 18 months. So like pretty much they're waiting for like say it's futures, like Cal futures or something like that. Like, well, they pretty much want you to go through like an entire business cycle of Cal futures so that everything that you had of knowledge just disappears. So it's like you can get hired by a new company, but you can't actually get paid by you get hired and paid by a new company, but you can't actually trade for the new company yet. I'm like, that's just insane. Like how cool or just like competitive is that space where you're like, oh shit, like I left this company so I can't do what I want to do or what I need to do for however long. Like I was like pretty impressed by that.
Yeah. Yeah, it's interesting. I think finance would be, I don't know, man. It's really crazy because like I think about this from time to time. Like finance would be the industry, the vertical that I would go into if I wasn't in tech. And on one hand, I really find it genuinely fascinating, like the game theory underlying the entire financial economy and just this like high frequency, high volume, millions of dollars moving hands on a second by second basis. On the other hand, I'm like, you don't want to make your passion projects your full-time job much of the time because like it kills a lot of the genuine enjoyment that you have from it. It becomes work instead of play. So I love the duality of working in tech and talking about finance. Sometimes I think about like what life would be like if it was opposite, if I worked in finance and talked more about tech, and because I have interest in both. But then content, I think, is something that's like creeping up as really something I want to dedicate more effort into.
Is that why you're live on a Friday? I don't think you normally do lives on a Friday.
I don't do normally lives on a Friday, and I'll tell you what I'm missing out on by doing the show over text after we get off. But that is why I'm live on a Friday, and I have another live coming up because I got to give the people what they want, man. It's my job, and I got to do my BMR video tomorrow and a Nebius video, and just commit to making a little bit more content than I usually do.
Everybody
Eventually,
loves Tevi.
what's that?
Everybody loves Tevi.
Not everybody. No, not everybody.
No, we got some people in the chat. Call them out. I'll shiv them.
Well, yeah.
Is there anybody in the chat that doesn't like you? I'll go to war.
Let's see. Alex asks, Tevis, what if Quantum breaks Bitcoin code? Dude, if Quantum breaks Bitcoin, Quantum's going to break everything. Like the level of encryption, if that, what is it, A26265 or something, 235, something like that. Like that level of encryption, if that breaks, yes, it's going to be bad for Bitcoin. Yes, it's going to be bad for Ethereum and crypto, but like it's going to be bad for the entire financial economy. So I don't really think that you should, you need to worry about that. Like, dude, your freaking PIN code is 4 digits of your credit card. It's 4 freaking digits. And you're talking about what if Quantum breaks Bitcoin? Like, how about you worry about that first? Which one is harder to break? You know, like, so
I'm curious. Yeah, I mean, sorry to cut you off. Ray said, and I know this for a fact. I've heard the story. How you saved not only his life but his like niece or nephew's life. I forget. Ray's gonna have to put it in the chat. It was insane.
What?
You'll see. You'll remember when Ray puts it in the chat. I forget what it was, but
I saved Ray's life twice.
Yeah, he'll explain it. It's like it's an insane story. It's like one of the most memorable things I've ever heard. I just can't believe I'm drawing a blank on what it was.
But... Yeah. If there's any women,
he'll put it in there. He'll put it in there.
If there's any women watching, I saved Ray's life twice. So just a regular day, no big deal. Anyways, I gotta visit these guys, man, in Houston. And I heard, so funny enough, Houston came up in Everyday Talk, and apparently, word on the street up here beyond the wall,
beyond the wall,
Matt, is that Houston has the most homeless population that these people have ever seen. And I was like, really? Have you been to San Francisco? But apparently Houston was like especially bad. Now I'm sure you guys live in like suburbia Houston, but Houston was one of the few places in Texas that I didn't actually get a chance to visit. Maybe I want to see for myself,
how bad the homeless population is.
Save them, Tevis.
Save them, Tevi. We'll drive you around in my Tahoe, and you'll throw dollar bills out the window.
Yeah. It hit me. You look like Pedro Pascal. Yeah, I don't know, man. Thank you.
Downtown's pretty effing wild at night.
Yeah. Now that I have you on, and we have Michelle and Ray here, we gotta figure out when we're gonna do the Texas trip.
We do, man.
Ladies, Tevis carried me from a burning building and paid off my new mortgage. I remember that. Thanks for bringing that up. You're gonna make me emotional if you bring that up.
Didn't even ask for a return.
Didn't even ask for anything. I didn't. Yeah, exactly. All right.
Drive by Roy's house. Roy lives surprisingly far away. Well, I guess so does Michelle and Ray, but yeah, Roy, that'll be good. I'll take you guys. I'll tell you what. We set it up. We'll go to one of my favorite steakhouses downtown, and that'll be a good time. We can go to Sonny's afterwards.
Yeah, I mean, I could pass for a cartel boss. Thank you. I don't know if he's calling me old or just, but yeah.
Tavis is such a damsel in distress.
Yeah, who knew? We have to do Texas soon, Matthew.
House.
The karaoke. I don't know, man. If you guys really want to hear me singing Backstreet Boys, then we can do karaoke.
Tell me why.
Yeah, there you go.
Ain't nothing but a heartache. Tell me why.
All right. Thank you, Matt. Thank you.
Ain't nothing but a mistake. Tavis, why?
Yes. Tevis saved my grandma from a burning apartment. This is 80 years before I was born. Yeah, you're welcome. You're welcome. Yeah.
Tavis never wants to hear me say, I want it that way.
Voice of an angel. Songbird of our generation. Unsubscribe.
I'm causing you subscribers at this point.
Yeah. Matt getting me weak in the knees. Demonetized.
Like, holy shit, this guy's playing in sync right now. Or is that Backstreet Boys?
Yeah.
Heavy, what do I want? Do I want chicken for dinner?
Hell yeah. I got some sushi. That was great.
You rich bastard.
Yeah, it was great. I thought about eating it on stream, but then I thought those days are behind me. I don't have to do those embarrassing things for money anymore. I don't have to degrade myself anymore.
The ASMR.
Yeah, exactly.
Listen to this squishiness of my meat.
Watch me eat sushi with my fingers. Matt Street Boys. There you go.
The Mad Street Boys.
Yeah. Okay. Arun says, just my 2 cents. Don't sing in front of the beautiful women you want. Thank you, Arun. Thank you for this.
Maybe that's why I've been single for God knows how long.
You know what? It's this mentality, Arun, that's causing you to sell Rocket Lab in hopes of buying lower, okay?
It's the truth. I didn't want to say it out loud, but
the true men sing what Matt sang in front of 300 people and hold Rocket Lab through the tough times, okay?
The true men mortgage their house and buy on top of the shares that they already own.
I say because I didn't buy it at $4. Oh, it's so
hey man, you can't buy everything.
Women want to feel safe and secure, and that usually comes from money. Well, Matt needs a harmonica. This is the most eclectic chat I've seen. It's just like they just spew whatever. What are your X handles? It's literally been on the screen for 2 hours, my guy, for both of us. Like the only text on the screen for both of us.
Where are you?
What
do I look for in a woman?
What do we look for in a woman? Wow. Do we want to answer this live, Matt, or do we want to save this and do this later?
I mean, I'm not hiding from anything. I like nice eyes, and I probably shouldn't say that. I'll stick with nice eyes, very kind. I don't know. Quiet. I don't know. Reserved. That's all I got.
Nice eyes, kind, quiet, and reserved. Matt's ideal woman right there. There you have it.
P. Morton, Jesus Christ. Don't say penis.
Yeah. I don't know if I want to answer some of these questions. This chat's getting unhinged. It's bootleg after dark, and it's only 7 p.m.
Yeah, I know. I normally
fire. You need a spicy Latina, highly recommended. Si, senor.
I'll take anything I can get at this point. Your boy is
no. My guy's a multi-millionaire saying I'll take anything. No, man. No.
Hey, man, I don't. You know, some people are able to. They got that thing. I don't have that thing. I don't have that thing that attracts women. I don't. You know, it's just me. I don't know.
Well,
Okay, this is who I am. I don't know.
we're gonna tell Matt I need help in the oil field. This guy's gonna give you his resume.
Oil. Just think about oil. You cooking?
You choose your stocks well. You choose your women well. Pick quality. Think long term. Pick quality. Have low expectations. Let's see.
Baby oil. Jesus.
Yeah, there's a lot of these comments that I just don't want to bring up on screen anymore. What I'm looking up for in a woman, I'm not going to answer that for you guys on the internet. The internet's forever, guys. But like preferably a Latino with a fat ass or something. I don't know.
There it is. there it is.
Such an idiot. Oh man.
Look for the guy. Jesus.
You know how like you have a great athlete and they are in their peak and they're just the greatest of all time, like Michael Jordan, right? Win 6 rings, and instead of just retiring after that, they play on for like 6 more years and they completely like deteriorate and become kind of average and kind of shitty and ruin all their stats.
It's the kind of women Tevis likes.
That's kind of like what the stream is. We could have ended at the peak, and now all of a sudden we're talking about Latinos, and it's off the rails. It's unhinged. My women are like my stocks on the verge of bankruptcy, WKLY says. Well, we were talking about debt actually earlier tonight. So Matt is a proponent of debt. Matt, would you wife someone up that has a lot of debt? Pay off student loans and whatnot?
What's a lot?
I don't know, $500,000, let's say.
It's different. I thought you were gonna say like $100,000.
Well, I got to make it interesting for you. What's $100,000 to you, man? That's pocket change.
I'm poor.
Yeah. Fake Rolex and
look, it disappeared, and I'm not even wearing it.
You're like the French president who, like, halfway through a press conference, takes it off and puts it in his pocket when he's talking about poverty. Yeah, go ahead, Matt.
I did that at work the other day. I got to my desk and I was like, my wrist needs to relax, and I just like dropped it on my desk. Well, it's hard to say. Like, you know, there's people I would accept with no debt or would not accept with no debt, you know? So, so I guess it really just depends on who they are.
What would Steve say about this? I mean, Steve tells me I'm a good role model, but I think that's just Steve not knowing enough about me. My wife was swimming in debt when I found her, and it didn't matter. It's a real man right there, Matthew. Not like you. All right. $500,000. If she's the right one, what does it matter? It's all numbers on a screen. You know? Tevis, you're squeezing that hand device pretty tight with all this woman talk. Hey, man, there could be a woman watching.
Tevin is just a man.
Just hearing all this slop that we're spewing right now.
Tevis is only but a man.
Yeah, she had a great booty. We'll be fine. $500K debt. Who cares? We'll pay that off. 100K? Nah, dog. Jared says. Yeah, I mean, that's the question, guys. That's the question. If she has 100K of student loans, are you going to pay that off? Different people have different answers. I don't know. Let's see.
I already proposed to June. She tossed me by the side.
I got no debt, nice eyes, and a nice beard. Matt. It's yeah. A couple of M's missing from that sentence, but yes, all those things are true. All those things are true. How much money can you spend without having to think about it? Example, at the supermarket for me is $5. Okay. Matt, how much money can you spend without having to think about it? I don't think either of us want to answer this, actually.
I don't know if I want to answer
Yeah. Just
that.
ask me what type of woman I'm into. That's the easier question.
Yeah.
90% of women are bad with money. Them coming from debt is just part of the game. Exactly. That's exactly it. Exactly it. This is weirdly a therapy session.
This makes me want to go to Mexico.
Yeah, June says, what if there was someone you loved, but you knew she would bankrupt you? June's asking the right questions. Bankrupt, like morally bankrupt me, like financially bankrupt me.
I've already been morally corrupted, Tevis, by many women.
Yeah.
The latest SpaceX insider stock sale valued the company at $800 billion.
Yeah, June is the real one here. That or a prenup. Would you get with someone that insisted that she didn't want a prenup, Matt?
I think it depends on where we both are financially when we get together.
You are where you are right now financially, bro. It's not a hypothetical parallel universe. You meet her tomorrow.
I mean, it depends. Like, is she the same place where I am? Like, is she also where I am?
Dude, what percentage of the population is at the same place where you are? Be real.
I don't know. I have no money, so a lot. Like, no, probably. I mean, no, probably would have to. It's probably why June didn't want to marry me.
Well, yeah, that's June. All right, June's a one of a kind man. Let's see. Matt is the most exciting YouTuber.
I paid him
Change
to
the
say
subject. SoFi is down 25%. If SoFi is not actually down 25%, I am blocking your ass.
It was up at like 30 something, right? You on the Cougars? Jesus Christ.
SoFi is down 0.5% after hours.
I think he means from all-time highs, 25%.
Oh, I mean, who cares, dude? All-time highs, like what it was 3 weeks ago, you mean?
It's going to zero, man.
It's going to zero. It's on its way to zero. I mean,
why didn't you sell? You're an idiot, Tevis. You should have sold at the top.
Women are irrationally exuberant. Love her to death, and she's a middle school teacher with God's gift to the world, but honey cannot spend money well. Honestly, man, the teachers, they're just like a blessing. All the public sector people, like teachers, nurses, like they're all like so they work for peanuts, and they have such a strong sense of purpose. It's just like have nothing but the utmost respect. It's crazy.
I do love a nurse. They do need need their support.
Yes, me too. Yeah.
Tevis supports nurses
all over the world. They're great people. All right. I think we will. Do I own any new bank? No, I do not own any new bank.
Oh man, I don't know why my throat's itchy today.
Nurses in the USA don't work for peanuts. They work for peanuts up here because healthcare is free. So, yeah, here it's just like it's crazy the abuse that they get.
Tevis baby back ribs. Tevis's baby back ribs.
All narrative ma'am says stay away from nurses. Okay. With that, I think wait, where's Tevis based? Yes, I am fortunately or unfortunately, depends on who asks, in Canada. And that is that country that is kind of like America, but
much worse.
Older, yes.
Damn maple dollars.
Yeah, exactly. Let's see. Okay. let's wrap up there, Matthew. Before we
Stream's gonna get me canceled.
before we bastardize this stream any further.
I liked Matt, but he started talking about women and Jesus. Not good. Don't worry about.
I'm so glad I don't have this chat on screen, like on stage, because it's just unhinged. Money like yours and you still live in Canada. I love to share. I love to share with all of my country folk. Okay.
Your taxes.
That's why, exactly.
They're involuntary.
I love funding the nurses of this country. Okay. Thank you so much, everybody, for watching the Bootleg Weekly. We're going to be back on Tuesday. And
you can do this twice a week now? Is Roy supposed to be doing this on Friday with you? Or?
Roy was supposed to be doing this today, but Roy was not feeling well, and I got ghosted by Roy. And thank you, Matt, for saving my butt and making the stream much better than it would have been with just me rambling on for an hour.
We have to raid somebody though. I think Steven Fiorillo is still alive, so we got to give him a good raid.
Ooh, okay. Do we want to? Okay.
Oh no, he stopped.
Did he stop? All right, guys. Who is live right now that we can raid? We raided Steven last time, and the chat did great. They
maybe Tanner. Tanner normally comes on around here this time. Let me see. My stream is down. My 24/7 stream is down right now.
Ooh, Amit is going to go live in 3 minutes, and apparently he has some chick with him. So maybe...
Oh, it's manager. That's right. He's supposed to go live with his manager.
All right. So we're gonna raid Amit, guys, and now we got to figure out what do we say to Amit when we raid Amit. We're gonna jump to Amit's channel in 2 minutes, 3 minutes when he's gonna go live.
What's something appropriate?
Shall we just say like Tevis and Matt say hi? Or
yeah.
What do you guys think? Tevis approves of the manager. All right, yeah. Don't let's not harass the
yeah, I agree.
The manager, make her hate her job on day one.
She's like, this chat's unhinged. I was supposed to plan all these live events for you, but I don't know if this is what your chat's like.
Let's just say, Tevis and Matt sent me. How about that, Matt? Yeah?
Yeah. Or we support nurses.
Let's see.
Latina nurses. Jesus Christ, this chat is unhinged.
Okay.
Turn into after hours real quick.
Yeah, exactly. So what are we saying, guys? What are we saying?
Tevis and Matt say hi, or whatever you said earlier. I like
Tevis and Matt say hi. Is that what we're saying?
Yeah.
Chat. What do we think?
Lame.
That's
what Tony said.
All right, shall we go with Latina nurses for the win? Latina nurses, FTW, or Tevis and Matt sent us, whatever.
I like Tevis and Matt sent us. That's PC.
Yeah. Tevis and Matt nurses. I mean, that's long. Don't worry, guys. He's gonna go live in a minute. I have it here on my other screen. We're gonna Latina nurses. He's never gonna he's never gonna know that it came from us though. That's the whole thing.
But still, I want to be respectful of his guest. She looks like she could pass as a Latina nurse. I don't know.
Yeah, maybe that might not be funny for her because obviously she doesn't understand the context of us talking about Latina nurses. But he's gonna go live shortly here, guys. Let's just go. Tevis and Matt sent us.
Yeah, see a couple people said
Tevis and Matt sent us. Let's keep it PG, and we go from there, guys. All right.
There he goes.
He's live. So thank you everybody so much for tuning in. We're gonna be back on Tuesday. Tevis and Matt sent us. Let's jump over to midstream right now. Thanks. See you soon.
Thanks all. Bye bye.